My name's Michael, and welcome to another episode of the Market Pulse. The market may be back on track to its bullish uptrend from the severe correction we saw the last couple of weeks. The Nasdaq is up 2.41% the last 5 days. The S&P 500 is up 1.72%, and the Dow Jones is up 1.56%. The market saw a pretty big increase in sales yesterday due to the announcement of Trump's narrower tariff plan that he is deciding to implement around April 2nd, which I'll discuss later on. So for this week's market calendar, Monday we had nothing too significant to talk about. Tuesday, today, we have new home sales coming in at a forecast of around 20,000 new home sales. So the housing market could be back on track. We saw housing starts with another increase. So it's starting to show that the economy still have some strength to it. On Wednesday, we have earnings from Dollar Tree. Dollar Tree was a very strong stock. A couple years ago, they were entering certain areas where other retail chains did not dare to go near. But their stock has declined since its high in April of 2022, primarily due to weak earnings and more competition flooding into the market, specifically Walmart. Thursday, we have Lululemon earnings. Lululemon's a very strong company and definitely starting to increase its market position in the apparel and footwear industry. Thursday, we also have initial jobless claims coming in at a forecast of around 3,000 new initial jobless claims. So we're seeing unemployment rise. We're also seeing maybe an increase in initial jobless claims from its forecast. So it is suggesting that there is still a slowdown in the economy. Don't like to see this number go up. But I definitely think that will cause some sell-off and some more fear flooding into the market for Thursday. On Friday, we have core PCE and PCE coming in. We also have personal spending and personal income coming in. So super important metrics to look at for Friday to end the market. Depending on these forecasts that I will later discuss, this could definitely cause quite the sell-off in the market, or maybe an increase in the market. So for the PCE forecasts for core PCE year over year, it is at a forecast of 2.7% to a 3% increase. Now in October of 2024 is at 2.3%. So from that 2.7%, we're seeing a 0.4% increase to a high of possibly a 0.7% increase. We saw retail sales come in not as strong as I would like, around 0.2% like I discussed last week. But we are seeing these numbers increase, which is definitely a good thing. The core PCE excludes food and energy, which are more volatile metrics. For PCE year over year, which does not exclude food and energy, we have a forecast of 0.3%. In October of 2024, it was at 0.2%, so a 0.1% increase roughly in a year. Now, it's kind of stayed at that 0.3%, primarily due to such volatile increases in food. But we did see a decrease in energy. So maybe that will show a higher than expected number than the forecast. But just from these forecasts, we can see that the economy is definitely slowing down. These numbers aren't coming in as hot as I would like to see them. But I don't think we're seeing a severe decline from these forecasts, as a lot of investors are suggesting and a lot of analysts are suggesting. But it's definitely not showing any good signs of some super strong growth in the economy right now, and tariffs certainly aren't helping. But there is good news on the tariff side of things that I'll discuss. So for tariffs, reports came in on Monday that Trump will be targeting tariffs on certain countries, some reciprocal tariffs. He wants to impose retaliatory tariffs on all U.S. trade partners. This could happen as soon as April 2nd, which he announces is Liberation Day, this so-called Liberation Day. I don't know how I feel about it, but his approach is coming in a little softer than we have previously seen with those 20 to 25% tariff hits. Now, it was stated that he does want to hit another wave of tariffs on pharmaceutical goods and automobile goods, so this could cause a little bit more worry in the market whenever that does happen. Now, additionally, he did announce that he wants to hit another tariff on Venezuela to take effect also on April 2nd. In a social media post, Trump stated, any country that buys oil or gas from Venezuela would face a 25% tariff when trading with the U.S. So definitely another high tariff getting slapped on Venezuela or anyone that does trade oil with Venezuela, oil or gas. Now, what does this mean for us investors? Well, any really U.S. oil company is going to benefit very greatly. It is clear that Trump wants to use more resources from the U.S. Just from these tariffs. He also wants to start to create more favorable trades for the U.S., which we have not seen in a while, so I don't think it's a bad thing, but more and more tariffs is just causing a lot more harm than good on the economy overall, as we're seeing. So really any oil stock may be good, but I would not rush in to buy shares. We're looking at a long-term view. You don't build wealth in the short term, you build wealth for long term. So just keeping an eye on those stocks, maybe holding them for a while. He still has another 3 years of presidency, so only time will tell. Now, these tariffs on April 2nd will definitely start to slow down the market. I'm pretty sure about that. I don't think we're going to see an increase once these are fully implemented. Now, I don't think it's going to be as big of a sell-off. And like I said, the market is starting to come out of its correction. For now, it's starting to come out of the correction. So maybe another just pullback in the market a little bit, but nothing too severe as we've seen from his other tariffs being implemented. Now for our weekly stock picks. I'm still looking at some of the heavy hitters, specifically Costco and Texas Roadhouse. Not that they're really primarily a heavy hitter, but they still have quite the discount and a great time to buy the stock. These companies are still trading at a discount, like I said. It's a great time to enter them in long-term positions. Fundamentally, they're both super strong companies. Analysts are still giving them that buy position. Both companies have a tremendous market position in their industry and in their geographical location. Costco is such a strong retail company and definitely the future of retail. Texas Roadhouse is very strong in the restaurant industry, and both fundamentally really strong companies, and they don't really miss out on earnings too much, which earnings definitely drives the market share up. Now, Lululemon, I would categorize under a cyclical. A cyclical is where a stock sits in an industry where profits are slow down and then start to gain pace again. For something like apparel and footwear, really depending on the volatility or the swings of retail sales or consumer spending, we can see this stock start to rise or fall. Now they do have earnings, and their forecast for their EPS is a 5.852, and their revenue is at an estimate of 3.58 billion. So if these numbers come in hot, definitely would take a look at the company. It's certainly increasing its market position in the apparel and footwear industry, and definitely competing with some of the top names like Nike, Adidas, Under Armour, Puma, all of those companies. And they have a little bit of a more unique view on how they sell their products. They don't sell their products in any wholesale fashion. They only have physical store locations. So definitely a little bit of a different sales channel than some of these other companies in their competition, which could be a negative side of things for them. But it seems that they're doing quite a good job, and it's not really hurting sales all that much, and definitely up there, competing with Nike. Nike's earnings of last week on Thursday had a revenue of 11.27 billion. So they definitely still have some more room for growth, as they sit at an estimate of 3.58 billion, so around that 4 billion mark. So Nike definitely has the top market position, I would say, out of all of the publicly traded companies that it has competition with, but definitely a very strong company and one I would look at. Now that's all I got for you guys today. I hope you enjoyed. Leave a comment down below, ask me any questions, tell me your views, or question anything that I said that you may not agree with. Definitely make sure to hit that subscribe button, like the video, and look out for the midweek market pulse, where I will discuss some of these economic metrics coming in, as well as earnings that I showed through the market calendar. Thank you for watching.